In today's video, we'll be covering market research. And these are the points on the spec that we will be covering. The first point is product and market orientation. So what is product orientation? Well, it can be defined as a marketing approach that is based on the product, not the customer. This means the firm prioritizes the product and the business believes the product will sell itself. An issue with product orientation is over-orientation, which is when the firm changes the product too far from what the customer wants to the point they no longer want it. An example of a product-orientated business would be Apple, as they focus on developing the technology in their phones and expect customers to buy because of their high quality. The tools firms can use for a product-orientated approach are product research, product testing, and having a product focus. And now we can move on to market orientation, which can be defined as the focus on the need of the customer, which is then used to develop the product. This means customers are at the center of marketing decisions, and so developments to the product meet the needs of the customer. A benefit of market orientation is that if the products more closely meet what the customers want, customers will value the brand more and so demand more from the firm, which in turn makes the business's products more desirable. An example could be Amazon, as they are constantly changing based off what their customers want, such as their food shops and entertainment ventures. The tools that can be used for market orientation are market research, market testing, and having a customer focus. And now we can move on to market research, which can be defined as the objective collection, compilation, and analysis of information about a market. So what can it be used for? It reduces the risks of entering new markets. It can be used to understand the customer behavior in the present and the future, as well as understand customer demand, such as how much they would be willing to pay, as well as identify competitors within the market. Now we will be looking at the differences between primary and secondary data. Starting with primary data, it is data that is gathered directly from customers, which means the information is new. Examples of how primary data is collected could be surveys, observations, interviews, or test marketing. And now we know what primary data is, let's look at the advantages and disadvantages of it. The information can be seen as valuable, as it is not available to competitors. Furthermore, since the information is gathered directly from customers, the information is more relevant and so useful. And lastly, the information is up to date. On the other hand, a potential drawback could be the sample size being too small and so lacking accuracy. The firm's bias may also make results inaccurate, as well as the whole process being expensive and time-consuming, meaning the firm's costs increase. With primary data out the way, let's look at what is meant by secondary data. So it is the gathering of data that already exists. Examples of sources of secondary data could be other companies or rivals to a business, companies that specialize in market research data, such as Mintel, as well as government websites. Now let's move on to the benefits and drawbacks of secondary data. Starting with advantages, one would be that the information is quicker to collect as it already exists. Furthermore, the information is cheaper to collect than primary data and so keeps a firm's costs down, as well as the fact it's suitable for smaller businesses which may have lower budgets. Now on to the disadvantages, the first being the fact that the information may lack relevance and so be less effective. Furthermore, it can be quite expensive to purchase information from third-party companies like Mintel, which means firms' costs are increased, as well as the fact the information might be out of date, especially in dynamic markets. Next, we move on to how ICT can support market research. ICT means information technology and can assist with market research in the following ways, may it be through company websites, databases, or social networking. By having a website, it allows firms to collect primary data cheaply and quite easily. This is because it allows them to track customer behavior while they are on the website, as well as receive customer reviews, which can be helpful to firms. Furthermore, if a firm's rival has a website, it can be used as a source of secondary research data, as it allows a business to see what their competition are doing. Databases allow firms to store large amounts of information, for example, customer details like their email addresses, which a business can target in their future email marketing campaigns, as well as email surveys to collect easy and relevant primary data. In terms of social networking, social media can be a powerful tool for businesses, as it allows them to closely connect with customers and their needs, as well as gain an insight into what rivals are doing. Furthermore, polls and surveys can be used to know what customers are thinking in a certain moment, for example, in response to a new product or advertisement. Moving on from this, we can look at market segmentation. This can be defined as the process where a single market is split into sub-markets, which are known as segments. Each segment of a market represents customers with slightly different preferences. Factors that can dictate segments could be income, gender, geographical location, or lifestyle. An example of market segmentation could be seen in the car industry. For example, Ford are targeting the lower income segment of the market, compared to a firm such as Rolls-Royce, who target high-income individuals with an interest in luxury cars. So what are the advantages and disadvantages of market segmentation? Well, it recognizes that not all customers are the same, which means consumers are more accurately targeted. It is also less expensive and wasteful than marketing to the entire market, and it can lead to increased customer loyalty due to their needs being more closely catered to. However, a potential drawback could be the fact that not everyone in the same segment will act the same. Also, it may be difficult to identify a market segment to begin with. It also requires more detailed market research, which can increase a firm's costs. And lastly, just because a segment can be identified does not mean it's viable in reality. And that's all for today's video. Thank you very much for watching. If it was helpful in any way, make sure to like, subscribe, and share it with your friends.